Did you know that the average American spends 6 hours every year just trying to understand their taxes? That's like watching the entire Lord of the Rings trilogy, extended editions, just to figure out where your money is going. It's enough to make you miss the good old days when taxes were simpler. Or were they? Enter Donald Trump, a man never shy of bold ideas, with his proposal to shake up the tax system as we know it. His solution? A flat 10% tariff on all imported goods. The goal? To replace income tax entirely and simplify the American tax code. Sounds great in theory, right? But as with most things in life, the devil is in the details. This isn't just some abstract policy debate, folks. It's about your hard-earned money, so buckle up as we dive into the wild world of tariffs, taxes, and Trump's grand experiment. Trump's 10% tariff, dubbed by some as the Trump Tariff, is a radical departure from traditional tax policy. This policy aims to shift the burden of taxation from individual incomes to imported goods. Instead of taxing your income, the government would generate revenue by slapping a 10% import tax on everything from Chinese electronics to Mexican avocados. This means that every imported product would be subject to this new tax, potentially altering the landscape of consumer goods. Trump argues that this would bring back manufacturing jobs to America, boost the economy, and make the tax system fairer. By making imported goods more expensive, the hope is that American-made products will become more competitive, leading to a resurgence in domestic manufacturing. The idea is simple: make foreign goods more expensive, encouraging consumers to buy American-made products. This could potentially lead to a significant shift in consumer behavior, favoring local businesses and products. This in turn would lead to more jobs and higher wages for American workers. The increased demand for American products could stimulate job growth and provide better wages, improving the overall economic landscape. At least, that's the theory. The success of this policy hinges on several factors, including how other countries respond and whether American consumers are willing to pay higher prices for goods. But critics argue that it's not that simple and that the tariff could have unintended consequences. They warn that higher prices on imported goods could lead to inflation, hurting consumers, and potentially leading to a trade war. Will this tariff be the economic magic bullet Trump envisions, or will it backfire, leaving American consumers holding a very expensive bag? The real impact of this policy remains to be seen, and it could have far-reaching effects on the economy. Let's take a closer look at the current state of our tax system to understand the potential impact of this radical proposal. By examining the intricacies of our existing tax policies, we can better gauge the feasibility and potential outcomes of implementing such a sweeping change. The U.S. income tax system is notoriously complex. It's a labyrinth of deductions, exemptions, credits, and loopholes that often seem designed to confuse even the savviest taxpayer. Millions of Americans spend countless hours and dollars on tax preparation software or hire professionals to navigate this maze. The system is also criticized for being unfair. Many argue that the wealthy, with their teams of accountants and access to loopholes, often pay a lower effective tax rate than the middle class. This sense of unfairness has fueled calls for tax reform for decades. Could a flat tariff be the answer to these woes? Would it simplify the system and level the playing field, or would it create a whole new set of problems? To answer these questions, we need to delve into the mechanics of the proposed tariff plan. The proposed 10% tariff plan operates on a simple principle. Every good imported into the United States would be subject to a 10% tax. This means that for every product entering the country, an additional cost is added, which is intended to level the playing field for domestic producers. For instance, a $100 shirt made in China would now cost $110 at the checkout. This seemingly small increase can have a significant impact on consumer choices, pushing them to reconsider their purchasing decisions. Similarly, a $500 television from Mexico would set you back an extra $50. This added cost is designed to make consumers think twice before opting for foreign-made electronics. The idea is that this added cost would incentivize consumers to choose American-made products, even if they come with a slightly higher price tag. By doing so, the hope is to boost the demand for domestically produced goods. The theory behind this proposal is rooted in protectionism, an economic policy aimed at shielding domestic industries from foreign competition. Protectionism has been used historically to nurture and grow local industries by limiting foreign competition. By making foreign goods more expensive, the government hopes to create a more favorable environment for American businesses to thrive. This could potentially lead to more jobs and a stronger economy as local businesses expand. However, critics argue that this approach ignores the interconnected nature of the global economy. In today's world, economies are deeply intertwined, and such measures could have far-reaching consequences. They warn that such a tariff could lead to retaliation from other countries, sparking a trade war that could harm both the U.S. and the global economy. Trade wars can escalate quickly, leading to higher prices and reduced availability of goods. So, is this a case of simple economics or a recipe for economic disaster? The debate continues, with strong arguments on both sides. The ultimate impact of such a policy remains to be seen, as it would depend on various factors including international responses and domestic economic conditions. Section 5. Tariff Tango Pros and Cons. The proposed tariff plan is a double-edged sword with potential benefits and drawbacks that are hotly debated by economists and policymakers alike. This complex issue has sparked intense discussions in various circles, from academic institutions to government offices. On the one hand, proponents argue that the tariff would revitalize American manufacturing, create jobs, and breathe new life into industries that have been struggling for years. They also believe it would reduce the trade deficit, which has been a long-standing concern for the economy. They believe that American consumers, faced with higher prices for foreign goods, would opt for American-made alternatives, thereby supporting local businesses and industries. This shift could lead to a significant boost in domestic production and employment, creating a ripple effect of economic benefits. On the other hand, critics argue that the tariff would raise prices for consumers, making everyday goods more expensive and straining household budgets. They also point out that businesses relying on imported materials would suffer, potentially leading to layoffs and closures. Additionally, there is the risk of retaliatory tariffs from other countries, which could escalate into a full-blown trade war, affecting global trade dynamics. Critics contend that the increased cost of imported goods would be passed on to consumers in the form of higher prices, reducing their purchasing power and overall quality of life. The debate over the tariff highlights the complex interplay of economic forces, making it clear that there are no easy answers or one-size-fits-all solutions. Predicting the ultimate impact of such a significant policy change is fraught with uncertainty, as it involves numerous variables and potential unintended consequences. To gain a more nuanced understanding, let's turn to the experts who have weighed in on this controversial issue, offering insights that could help navigate this complex economic landscape. Section 6. Experts enter the fray. Economists and trade experts are divided on the potential impact of Trump's tariff plan. Some, like Professor Paul Krugman, a Nobel laureate in economics, argue that the tariff is a terrible idea that would hurt American consumers and businesses. Krugman warns that the tariff would lead to higher prices, job losses, and slower economic growth. Others, like economist Peter Navarro, a former advisor to Trump, believe that the tariff is a necessary step to protect American jobs and businesses from unfair foreign competition. Navarro argues that the tariff would level the playing field and allow American businesses to compete on a more equal footing with their foreign counterparts. As with many complex policy issues, there is no clear consensus among experts. The potential benefits and drawbacks of the tariff are subject to ongoing debate, highlighting the importance of careful analysis and consideration of all perspectives. Section 7. Taxing times, indeed. The proposed 10% tariff to replace income tax is a radical idea that has sparked intense debate. Proponents argue that it would simplify the tax code, boost American manufacturing, and create jobs. Critics counter that it would raise prices for consumers, harm businesses that rely on imports, and potentially trigger a trade war. The truth likely lies somewhere in between these extremes. The tariff's impact would depend on a multitude of factors, including consumer behavior, business responses, and the actions of other countries. Ultimately, the question of whether to implement this tariff is a complex one with no easy answers. It requires careful consideration of the potential benefits and risks, as well as a nuanced understanding of the global economic landscape. Section 8. Join the tax talk. The debate over Trump's 10% tariff is far from over. It's a conversation that affects every American, and it's crucial that we engage in a thoughtful and informed discussion. What are your thoughts on this proposed policy? Do you think it's a good idea or a recipe for disaster? Share your opinions in the comments below and let's continue the conversation. For further exploration, check out these resources. Link to an article discussing the potential impact of the tariff on consumers. Link to an article analyzing the potential impact of the tariff on businesses. link to a video debate between two economists with opposing views on the tariff. Remember, the future of our economy depends on informed citizens like you. Let's make our voices heard.